The way people interact with property is ever-changing, meaning that management and development models need to constantly evolve to cater for the shifting needs of customers and communities. In this program, we will be getting to know Harry Fenner, the founder and CEO of Nirvana Property Group, a property and place group with a difference. We will be learning about his background from judo champion to property investor and finding out what drove him to create this innovative company. But first, we join Harry in Surrey, where he has kindly invited us to his home.
I'm Harry Fenner, I'm the CEO and the founder of Navana Property Group, which in essence is a multifaceted property company ranging from residential, commercial, asset management, all the way through to build to rent and PRS sector, including a suite of consultancy services, community engagement, placemaking, etc., as well as doing our own development.
So what was the catalyst that resulted in Harry's want to start Nirvana?
I think from being on the investor side of the fence, it was evident the property market had changed massively, and I couldn't really see anything that was being done hugely about it, especially from an investor's point of view and being on the other side of the fence where I could actually see a real need for some tangible change. Tools that enhanced technology and transparency and communication, which, yes, obviously is evidently needed from an end user, leaseholder point of view and occupier point of view. But even as an investor, it was slowing down the processes of our businesses as well by that side being so inefficient. So I think they were probably the main fundamentals around why Nirvana, I felt, needed to exist.
One of the major areas that Harry identified as needing vast improvements in the industry was technology and the effective implementation of it. We asked Harry what Nirvana has created to bridge this technology gap.
We've created two key tools, if you like, one that's focusing on financial transparency and another tool that is focusing on community engagement, placemaking, and directed more at the end user of the places and spaces that we look after. From a client aspect, the tool is meant to give real-time financial transparency as to how their development is being run. It's no secret that most managing agents will dish out a weekly, monthly, quarterly report, usually to the client's spec, to tell them exactly how their development is doing, and it will always involve an element of accruals and prepayments, etc., etc., etc. So it's as accurate as it can be until we get to the end of financial year end. The financial tool that we've created allows them to see the financial status of their asset in real time at a click of a button, so they can see where their money's being spent by the second. Developers have taken it extremely positively thus far, and resident groups that we've been talking with in pitches that we've been doing have really taken to it. I haven't seen as a developer or investor a tool ever exist, and we did extensive research not only in the UK but even in the Far East, and the frustrations that I was experiencing, I couldn't see any other company that was really doing anything about it. I mean, most certainly, PropTech's been bounded around, placemaking has been bounded around now for an age, but I couldn't actually see anything tangible being created by anybody, and probably for justified reasons. Large propcos, usual red tape, logistical nightmares of pulling out of the old and into the new, and unfortunately, small guys trying to have a go at it, trying to get out of the blocks. Literally not having the gearing to do the things that needed to be done. The investment arena had gone reasonably well for me, and I saw an opportunity, a niche to enter the market, hopefully with the mentality of rising tide lifts all boats, where I could try and elevate the industry by creating these tools and technologies that I saw was needed. Not only tools and technologies, but also people and the way it was approached and the type of people that we were employing to create better places and spaces where people live, work and play. That was probably really what gave me the to sort of put my money where my mouth is on this and give it a go.
Of course, as a business that centres around buildings, it's only fitting that the headquarters of the company is situated in one that is iconic. Harry chose to base Nirvana in Europe's tallest building, one that is recognised across the globe, the Shard. He invited us there to take a look. But before we go inside, we wanted to find out where Harry's ambition has come from. Like most innovative company founders, it's clear that Harry is extremely driven as an individual. But perhaps over and above many other founders, Harry can demonstrate this with his experience as a professional athlete. Harry was a full-time athlete competing for Great Britain for many years, winning and placing in some of the largest tournaments around the globe. Having started at the age of 5, we wanted to find out what a lifetime of judo had taught Harry about business.
My name's Fraser Chamberlain. I'm under 90 kilogram for Team GB. I know Harry from training full-time together. We've been friends for about 15 years. Harry's competitiveness, drive and dedication from when we were training as full-time athletes has certainly reflected on how quickly he's grown in the business world.
So what has judo taught Harry about business?
I left at 15 to go on a sports scholarship to compete for Great Britain for the under-20s judo team. And then from there I probably spent the next probably 7 to 10 years of my life travelling around the world. As glamorous as it sounds, it wasn't. It was travelling from training camp to training camp and tournaments and staying in some quite ghastly places. It definitely gave me a bit of a wake-up call that no one really cares, just deliver, because it's purely rewarded on performance, not effort. And definitely in judo it was, you could try as hard as you think you possibly could and realise that wasn't good enough, and the answer is only try harder.
It's clear that judo has had a huge impact on Harry's business mentality. However, following being tipped to represent GB at the Beijing Olympics, Harry's judo career came to an end.
In mid 2007, May of 2007, I had quite a horrific car accident, and I had been tipped to represent Great Britain in the Olympics at that stage. So I needed to sort of hang up one dream really and start focusing on another, which sort of took me into my working life, if you like.
Dohowever, Harry didn't go straight into property. He had a successful period growing and selling a security business.
So I ended up doing security work. I suppose this is where my little entrepreneurial flair came out, which it gave me a bit of a realisation as to that sort of that hunger in judo wasn't being fulfilled. I dabbled in trying to set up my own security firm. I did that maybe for about 18 to 24 months, which then led another larger security company in the area to offer me a price to buy it. So I sold that, and that's what sort of gave me a bit of a boost to then buy my own property. So I bought my own property, moved out, 22 years old, and then needed a proper job because I just made myself redundant.
Circumstances led Harry to begin work looking after the security of a building. But this alone did not satisfy Harry's entrepreneurial flair. He made inquiries with the company to expand his role and shortly began work as the building manager, having more involvement in the actual financials and safety of the property. It was this pivotal decision that took Harry from simply protecting a building to looking after it, that ignited his passion for property and started him on his journey that would end up culminating in Nirvana. Coming up after the break, we talk more about Nirvana, their move to the Shard, the development of their technology products, and what Nirvana have planned for the future. Join us after the break. Before the break, we found out about Harry's background, from full-time athlete, competing for GB, to entrepreneur and property investor. We also talked to one of his past teammates, visited his home, and also Nirvana's new head office in the Shard. In this part of the programme, we will be asking Harry more about the technology that Nirvana are bringing to the market, why they are doing so, and also what they have planned for the future. But first, let's learn more about Harry's experience in the property market.
So my first sort of step foot in the door, if you like, was being a managing agent, which was sort of even then seen as the bottom of the industry. If you don't have any money to start playing around the property game properly, then start maybe looking after other people's who did. So I started doing that for a while, and yeah, it was very slow paced for me. And again, I think it maybe was coming back from my sort of athlete background. It was extremely slow paced. Results weren't quick enough. There was nothing sort of tangible to it. And and things never really came to a conclusion. I think in sport, it's if you win, you win. If you lose, move on, and nothing. It was a plodder. So I wanted desperately to get involved in investment and creating things, whether that be development, things that were tangible. So in my sort of latter part of working with that company, I started sort of late evenings and weekends getting involved in sort of an investors network. Pretty much just chewing people's ear off and also listening to what they were doing in the sector. And it was all pretty much same old. And these things really, when you go to them, is you've really got to try and find what value's in it for you individually and what works for you individually, because what works for some doesn't always work for others. I was trying to really find a niche, a segment in that industry where I could get involved with no money really to play with of any real meaning. So I started trying to work out how I'd acquired my own personal property, which was just obviously a normal deposit and straight mortgage.
Undeterred from his initial disappointment in his property investment journey, Harry's prevailing determination saw him spot a potential opportunity. Taking advantage of the difference in loan to value ratio from the first finance to refinance. Harry explained how he used this technique to kickstart his own property investment portfolio, which now contains approximately 130 single assets, ranging from residential through to commercial and industrial.
The one thing I found interesting when I did that was when it came to placing a normal mortgage, it was based on the purchase price. It didn't matter, your deposits were based on the purchase price. So whether the property was worth £1 million and you're buying it for 100,000, if we were working at, for example, a 90 loan to value, we'll loan you 90,000 on your 100 grand purchase. Even if the property was worth $1 million, they didn't care. And I thought that's really odd, because the security is there. So what's the issue? But it comes down to responsible lending. So I thought there's got to be a way around this. Because on a remortgage, however, it's based suddenly on value and not the sale price. So if you want to remortgage something, they care what the asset's worth. And I thought if there was a way of you actually owning the property first and doing a remortgage, you'd get better bang for your buck if you could find a decent deal there with equity in it. So that's when I naturally was at this investors network, and I started hearing a lot about people who were trying to buy from auction houses to try and get some value. So what I started to do, Connaught Rooms I think was the first one I went to. I think it was an Allsops auction. And it was trying to go down to the auction houses and seeing what was being sold as a sale price. I mean, this is extreme novice level property investment is where I started. Trying to see these guide prices that seemed incredibly cheap when you went and did your search on street values to see what it was going to go, what it was actually worth. And it was worth, it was up as a guide price of 200,000. You go to the auction and depressingly it'd sell for 600 grand, and you go, I see, these guide prices are literally that. But what I found was these guide prices at the time, not so much now, but at the time, were being set against the reserve prices of what banks were owed in terms of their repossession of a property. So I thought, right, I mean, these people, if they actually do not get a good show in the room, their reserve price could really go for it. That reserve price is what the bank needed to sort of reimburse themselves their owed funds. And that's when I started approaching people and intercepting in between the auction house and the mortgage, which was seeing these properties where people were being repossessed for example, for the sake of math here, £100,000, but your property's worth $500,000, again, for example. And I was offering them, which when they actually did get repossessed, not only are they going to be blacklisted that they've been repossessed, if it does go for a value where they end up with a bit of cash back in their pocket, probably going to struggle to ever get a mortgage again within the not too distant future anyway. I was coming up with sort of an ultimatum offering for them, where I was sort of taking the risk out of it and putting a bit of control in their hands, where I was saying your property is worth $500,000, that's no secret, no one's here to fool you, and your reserve price that you owe the bank is £100,000, for example, but I will clear your debt with the bank and I will give you £150,000 in addition as a deposit to go again. So I was buying the property for 50% below value, but it gave them some certainty. It also meant they weren't going to be blacklisted and be fully repossessed and actually paid off their debt. So it gave people some security and ability to move on and stay in the market. They were the sort of deals I was arranging. The only issue at the start was I had no money, so it didn't really work. So I ended up getting involved with a bridging company. I was bringing the bridging companies opportunities where I was saying, you can take a first fixed charge against this asset, but it's worth £500,000 and I need £250,000 from you in order to purchase it. I mean, they almost, with their first fixed charge, didn't want me to pay them back. They would have liked the asset with the equity value. So I was getting the backing from them, paying off the bank, as said, and giving them the £150,000, and then sometimes having a tenant in situ at the end because they wanted to remain there. So they had some money in their pocket, stayed in their family home, didn't get blacklisted, paid off the bank, and they were very happy with that. But I had now an asset with £250,000 worth of equity in it. And what I was doing at that point was going to the normal conventional top 5 bank and placing a remortgage, where suddenly now the mortgage was 90%. I mean, now we'd be lucky to get 25, let alone a 25% deposit, let alone 10. But I was going to a large conventional bank and placing a remortgage with them, where they were giving me 90% loan to value against a £500,000 asset, leaving me now with a huge amount of extra skin in the game, if you like, because I was ending up with sort of a £450,000 cash injection from the bank, as if I'd put down my 50 grand 10% deposit. And with that £450,000, I was able to repay back the bridging company their £250,000, £200,000 left in my pocket, equity in the property to the tune of £50,000, a tenant in situ, and I hadn't actually let go of a pound. And that was my own unique way of really finding a no money down investment. And we did very well in a very short period of time, which then led me to be able to the initial investors who I was meeting at these investors networks, where I was able to sort of now had enough funds to start getting myself involved in things that they are involved in and can bring skin to the game on small developments and land acquisitions and planning flip opportunities, etc. And that went on for a further 2-3 years, and we made acquisitions in startup ventures as well as sort of medium-sized operations, not necessarily directly in the field that we're involved in now, directly in property, but all had adjacency to the property industry. And yeah, and then that side did very well. So I mean, in a short period of time, we went from sort of zero to a portfolio of 132 private properties, including commercial, and equity holdings in seven different companies, which as a conglomerate probably provide a turnover now of just over 180 million. So yeah, a very short period of time, we sort of we built ourselves up.
Despite having a significant amount of success in both property and business investment, Harry's ambition was to build a business with a long-term plan and lasting impact. And that was the catalyst for Nirvana.
When I initially set out, it wasn't my key driver to find an array of people who worked for managing agents in the commercial and residential sector and put them together and end up with exactly the same product, which I wouldn't go as far to say doesn't work, but it doesn't really offer a difference. So it was really to find like-minded people, and length and breadth of our organisation now has an array of different people from different backgrounds. We've got people who, yes, have worked on the developer side, who have worked for large-scale propcos. We've also got people who have come from building app technology, 5-star hotel services, people who have come from a filming background, all different kinds of customer or just general service delivery lines. People who have been from a straight-up legal background. So yeah, I mean, it's finding at this early stage, it's finding people with transferable skill set. Property management, that side of our business anyway, has never really been an industry that requires Einstein level of thinking. I mean, it's common sense, but it does require professional lines within it. So the way we have structured the company is to do away with the property manager role as we know it. So as you'll see with most managing agent companies, you'll have a property manager who will show up to all your AGMs and EGMs and client meetings, and he'll have a ton or she will have a ton of questions put to her as around service charges, or why is a building got subsidence and cracking, or explain to me this lease review issue, etc., etc. Which typically they're never qualified to actually give you an answer on, unfortunately. And it's not fair on the client, and it's not fair on the property manager either. It's unprecedented, how many hats they're meant to wear and deliver. They expect to be a qualified lawyer, an architect, a surveyor, an accountant, all in one. And it doesn't work, and it never has worked, it never will work in my view. Property manager role, as we see it, is far more a customer relations role, managing clients' expectations and making sure that the plates are being spun at the right rate, to ensure that the client is getting these qualified prompt responses as and when called upon, or as and when we see they're needed. We've gone extremely heavy on our community engagement and placemaking. Again, placemaking it's been a buzzword that's been bounded around for the last 5-6 years, and again, nothing really has tangibly come from it. People, sort of do a cake workshop in the middle of a development and say that they've cracked placemaking, and it requires so much more than that. It's developers at the moment. Unfortunately, their pull on for asset managers with a true understanding and commitment to placemaking is scarce, and it's very much agents chasing the coattails of developers at the moment, rather than being able to even arguably stand in a position shoulder to shoulder with them on advising and supporting them to create real places and communities as opposed to sort of tangible building product.
One of the factors that Harry strongly believed needed to be improved in the industry is its willingness to adapt to, and furthermore, invest in technology. Harry's belief is that transparency in the industry is key, and technology enables transparency more than ever before.
One of our app products does that very well in terms of transparency. I mean, one of the key questions that you hear throughout this industry, especially in the residential sector, where is actually our service charge money going and where is it being spent? And with the best will in the world, there's managing agents out there keep tight books and are as transparent as they can be in providing where funds have been spent, where they're planned to be spent, and you receive your budget, and your budgets are approved, and money is apportioned. And people can see monthly or quarterly reports, sometimes year-end accounts is the most common they'll receive in the absence of quarterly or regular reporting, but it's available, and that's really where the industry has got to. But there's never to date been a product where leaseholders and clients are able to see real-time transparency on exactly how their particular personal service charge account has been apportioned, where it's being spent and when it's being spent. And the app technology that we've created and bringing to the market imminently, effectively, to put it into simple terms, is effectively a banking app for service charges is one of the features within this product, where people can see live how their money has been spent and where it's been spent. So as we spend money out of the bank in relation to that particular client's bank account, they'll be able to see exactly what left, when it left, by the second, and the reason behind it.
So there you have it, from judo champion to property investor, and now to the founder and CEO of Nirvana Property Group. But we want to know where Harry sees the future for businesses in the industry.
I think any company, especially in this industry, that recognises the need to adapt in this current market and invest in new ways of doing things and technologies, and does so with pace at the forefront, will thrive, and probably the companies that you'll see here in the future.